What's up, guys? It's November 28th, 2023. We had a pretty good day in the markets, a lot of range. I think Bulls and Bears made money. It was a good day for everyone, I think. I hope you guys made some money. Get into it. So yesterday, we've been pretty much range bound this whole week, for like 2 weeks almost. And yeah, today we've been having very similar days in terms of like up, down. Then we look at yesterday, up, down, and then we look at today, up, down. But today's range was a little bit bigger. It was bigger. So yesterday we had a range pretty tight, and we opened up with a gap down. We opened up right below yesterday's low of the day, which I think is pretty important to understand where the price is at. I like to look for reversals around yesterday's low or high. And if we just take a quick look at the chart, look at the reversal around the low, reversal around the high. You can also look for continuations, obviously, if it's a trend, but I've been saving myself some money by looking for reversals around highs and lows. And not to mention, we were at the 50% level, which I mentioned in yesterday's video. I was looking to be a buyer if we bounce out the 50% level with strong bull bars, and that's what happened today. So bar one we had a gap down, and bar one was continuation, and they got another leg down, about 3 legs down. That's 3 legs. Bears that put a stop order here never get filled, and the market kind of jumped up and raced up. The market came down, creating a double bottom, and it looks like the market's trying to bottom out around the 50% level of last week's range. Last week's range is here. The low of the range is here, and 50% is right there. So that's where we were at today on the opening. First 6 bars of the day is still overlapping with a little bit more bearish sentiment, you could say, with the gap down and more bear bars, but at the end of the day, it's overlapping. It's a lot of overlapping bars, so this is a range bound environment. This was a strong bar put in, and then we see bears try and sell. However, the market races back up, creating somewhat of a bull flag. Here's the pull up, and then the legs down, and then they push up. I got long here, or I think it might have been here. Push into the EMA, and I think this was a good bear trap because this candle came down 1 tick below this candle, and that's just letting us know that bears got filled. Bears that put a buy stop order got filled, and then the market went against them. However, the next bar over, it gives them time to get out. So the market comes down, bears buy back shorts, and bulls buy the low. This is a bounce out the 50% level, reclaim of yesterday's low. I think this is pretty bullish. Kind of like I want to say head and shoulders, but I think it's like an inverse head and shoulders. I don't really know, but we have a new low, and then they try again and fail, and then we have a higher low, and we push up. This was a really good breakout. Congrats if you caught that. I got my limit order got filled around here. I had to give you guys an update on what I'm doing with my trading. It's been going quite well. I had my best day today, but we're going to talk about the price action, and then I'll give you guys an update at the end. So, breakout, we're bouncing up 50% level, reclaiming yesterday's low. Breakout above the EMA, we close the gap, and we have this huge bar. At this point, I think it's always in. If you short this, you got to get out as soon as it starts trending. Like, this is a really good reversal bar. I would get out of shorts if you try and go for the exhaustion. And I don't think it's a bad idea to exhaust, but maybe you exhaust the higher low, which would be here, and that also causes a trap. Creating a bull flag. This is a really nice bull flag. I have a pull. I'm going to start drawing trend lines so we can just keep them on here. I was trying to keep the charts clean, but I'm going to start drawing trend lines. So, okay, here's the bull flag from the bodies, and the market breaks out here. I ended up missing this move, but I'm not too pressed about it because I made good money. I'm going for a leg 1, leg 2 move here of this bar only, body to body, and it was meant. So if you bought the close of this bar, you might get filled. It goes right up to you might not get filled depending on how you measured. It came very close to 1R of this bar. The bulls get their second leg, and then the third leg is a trap. This is really important. I actually almost got trapped. I'm going to be making a short video explaining this. This is the third leg in a range. So we could say leg 1, leg 2, leg 3, or you can maybe say like leg 1, leg 2, pullback, leg 3, flag. However, the point of it is the context of this flag is late in a trend after huge bars, and we're trading above yesterday's high now. Remember the place to look for reversals. We did have a small range, so I was keeping that in mind that we could just keep trending higher. I was thinking we were going to tag last week's high, which is why I was going to get long for a scalp. However, I had a buy stop order and I got saved, so I didn't get filled. And as soon as this bar got put in, I just stopped trading because a third flag can be a trap, and this is a high one. This is a trap because high ones have more sellers above. We went away for a high 2. This isn't this. I don't think that's a good high 2 because it's the high after a pullback, and we don't make a new high. This is the pullback, and then we make a new high. We pull back, and we never actually get a high 2. So if you only trade high 2s, you would be saved. So if bulls that hit enter on here are getting trapped because it's late in a trend and we're selling and you're buying high in a range. But then, although we are breaking out and have great bars, you have to ask yourselves: are these bars in a bull trend or are these bars in a vacuum test of resistance? In ranges, we tend to get vacuum tests, which makes the bars very enticing, but in ranges, these are just, you're just buying the high of a range. Here is not the high of the range. We're still at yesterday's low. Here, I do think is the high of the range, but the market retraced and made a bull flag, and all the bull bars and bear bars cannot penetrate the 50% level of this bar. What I mean by that is, see here, no, this is the 50% level of this range, right? Bears don't close, bulls close. Bears can't close, bulls close, close, close. So very bullish market structure, strong breakout. I think it's good for a second leg. Second leg is a high probable trade, and that's what we get here, a second leg. So leg 1, leg 2, and then third flag fails. I was looking to buy here for a bounce. However, I'm really forcing myself to trade with stops, and I never got filled, thankfully. So trading with stop orders is very important for new traders, I think, because I would have got shredded to pieces if I got filled on any of my bad trades. If I got filled here, that's a wreck. If I got filled here, that was a wreck. And I bought, I had a stop order above this bar. It never filled me, and look, it dumped. So I did have a hard time adjusting today on the downside because I thought we were in a bull trend, but that's another good reason to just trade with buy stops, because I got saved and I did make some money off the lows from a range play. So I think buy stops are pretty important to understand, and you will get crushed if you trade in a limit order. This is a limit order market, so if we put a buy stop here, you would get filled and rip against you. Well, okay, in this case, if you hold it, you make money. But let's say you short here, you don't get filled here either. Do you see how it kind of saves you already? But if you market order here, now you're in for a ride. And I'm just saying that because I think a lot of people market order, and I just started doing I've been playing around with buy stop orders, but I just recently really committed to only trading with buy stops, and it's great. It really helps me save horrible trades like this. Okay, back to the price action. So we're right here. This is a high one. This is a trap. Don't buy these. I still tried it for a scalp and thank God I didn't get filled, and I learned my lesson without losing money for the first time ever. And bears get their leg 1, leg 2 into the EMA. I thought this would be a good flag for the tag of last week's high. However, they started getting bear body gaps. I think I said that bear gaps are getting put in. So there's a gap here, gap here, gap here, gap here, gap below the EMA. Bears are in control. We have a bear flag here. With this here is the bear flag, and there's the double top right above it. So it's kind of like a triangle vibe, and they break out and go for another move down, another vacuum test. Just like on the uptrend, we have to ask ourselves: is this the start of a bear trend, or is it a vacuum test of support? It's a vacuum test of support. Look where we sold off into, right above the 50% level. And bulls keep this body gap open for the rest of the day, and this gap stays open, so that puts the market into a range. 2 gaps stayed open. I'm starting to notice that in range days, we will have a very small gap on one side and another gap on the other side, creating pressure. I guess that's the gap. So more of a bull gap, bear gap. But do you guys see what I'm saying? I want to start leaving my charts like this so we could talk about it, and I'm going to get a silent keyboard and type. I think that'll really elevate the videos, and I'll like download the chart, and then you guys can take it and do what you want with it. But that's when I get a silent keyboard. When I get a payout, if I ever get a payout, I took some nasty hits, which is why okay, back to the price action. So we have two gaps open in the market's range bound. Big up, big down. And this morning's price action, this should be no surprise that we're ranging and we're not selling. I got long here and I hit out very quickly because I saw there was no follow through around here, and I was like, I have to buy low if I want to get my 5 points to this recent high. And this may look like bad price action, but I was really trying to pay attention today, and the market rallied, came down, rallied, came down, rallied. The market's rallying. It just can't hold its legs, you know what I'm saying? All these wicks prove the market's rallying. However, it also proves the market's selling. But then look at the bear bodies. They're not selling by much. They're selling against this. They're selling against this. You can argue this bar's here, but I think that was more of a vacuum test. So you could say there's orders. And there was orders. I mean, the market did sell. You couldn't make 5 points to the downside. I was more bullish because I just was today. I usually am more bullish. But I also said if we stay above the 50% level, I'll be bullish. I got long here above this bar because I looked at it as a retest of this bar, and I was able to catch 5 points. I got filled right here, and I stopped trading. And this was a tight bear channel, and you could have also made money. You could have made 5, 5, 5. That's 15 points. 5, 20. You know what I'm saying? So yeah, it was a really good day. It was. I think if you were patient, you could really make some money. Either side, you had a lot of time to. You could have missed the whole trend and just made the exact same points all the way back. This is a cool thing I'm going to start looking out for. I'm not going to take any trades around it, but I am going to keep an eye out for final flags and high ones. Because I got long thinking we'd go like that, but in the back of my head, I was like, this could be a trap. And it was, which is just, it's hard to believe sometimes. But yeah, the high one is a trap right here. So gaps are staying open, gaps are staying open. We are still range bound. Just go over the daily chart real quick. Market is looking skimpy up there. I don't know what is going on. Daily chart does not look fun. Very wicky, very range bound. So when the markets are range bound, we can think about the opening being an important price that gets tagged, and it does get tagged. Go back and look at range days and look at what prices get tagged. The highs, the lows, the opening. These are all important things to understand because the market may seem like it doesn't repeat itself, but it does in context like the opening price on a range day is important. Trend days have 2 gaps open. Just like little things like that. If we have a tight range within 18 bars, there's a good chance we could break out, and that trade will lead to the high or low of the day. And that's not even looking at the price action, but everything I said does happen. It is repeatable. Leg 1, leg 2s are repeatable. So start thinking about what is repeatable. Okay, like the market's trending. So, okay, that's a bad example because we start going into a range. I've been trying to put a lot of thought, and these videos are I hope they're helping you guys out. This is a trending environment, so what are we thinking? Should I be looking for reversals, or should I be looking for with trend setups on the 5 minute? Here, maybe you do start looking for reversals. I mean, it is what it is. It's the height of the range, but we're day traders, so we can just flip sides. And what I'm trying to get at that is, if this is trending, and then these are ranging, and then we're ranging up here, there's different modes to trade, and that's why I'm having a hard time adjust, and I'm getting scraped up, because I made all my gains and passes accounts here. Now I'm trading real accounts here, so I'm trying to really focus on what are the intricacies, or what are the nuance, what is the important points for a trending market versus a range bound, because Brook says there's only 2 types of bars, a trend bar and a range bar. So he makes it very easy for us to think okay, trending, I'm looking for with continuation setups, flags, wedges, maybe if we're bullish, looking for reversals at support. If we're range bound, I just recently kind of started understanding hey, that opening price gets tagged on range days. Look at yesterday, it was crazy. So I still haven't placed any trades around these yet, but this was the opening price, and you could just trade to it all day and make money. Extended, trade away, extended, trade to it, extended, trade to it. Look at that. even if you got short here and you had your stop like here, maybe you get stopped out, maybe you have it one tick around yesterday's high, you short again here, you trade it to the open. You guys see? Okay, now look at the trending days. Look at the trending days, right? Here's kind of like a pullback trend day. We race into support. We race into resistance, and then we sell off into support, and we get this was a hard day to trade. I remember that day, but look how bullish we are within the downtrend. Look at here. We're range bound, and the breakout is to the bull side. So there's clues. If you guys start to notice these things, drop them in the comments, because I'm always on the hunt for things like that, because they are helping tip the scale in my favor. If you guys like these breakdowns, leave some comments. Tell me what you guys are doing, what type of trades you're taking. Happy holidays, a couple days away from Christmas and then New Year's, and then we're making money all 2024. I hope you guys are making money. I feel the payout on my fingertips. I'm just having these moments of like, when was the last big hit? I took a big hit prior to the prior week of Thanksgiving. I can't remember, but just little things. If I could just nip them, Al says, if he could if you could stop making that one dumb mistake a day, it'll really change your P&L. And I'm starting to see what he means by that. It is really like 1 or 2 trades, or 1 or 2 days out of the whole month that are just horrific losses, and I spend the whole month making it back. So if I could just nip those in the butt, we're good to go. I hope you guys are making money. I hope you guys are learning. Hit the follow button. I drop these every day at 3 p.m. Have a good day. Bye.